2024 has been a great year so far for the US stock market. Currently, the market is up over 24% and it doesn't seem to be slowing down. In this video, we're going to be talking about the reason why the US stock market is constantly making all-time highs, why the UK market is dead, and how interest rates are affecting your day-to-day. Analysts and professional fund managers are already looking optimistic as the Fed could potentially cut rates early as this year. Now, this is because inflation is already starting to ease off a bit, which is going to drive some optimism within the markets as we see those returns pile up. This is positive because at the end of the day, interest rates do affect a lot of things. This will affect your mortgage payment, this will affect the cost of debt and overall goods and services. So when we see a rate cut or there is rumors to be a rate cut, this is why we can see some optimism within the markets. For some more context, essentially interest rates are the cost of borrowing money. When we see interest rates rise or they are forecasted to increase, this can be seen as a pessimistic view on markets because money becomes more expensive. So when money becomes more expensive, people have less capital to invest in specific markets. Okay, now the opposite essentially happens when we see an interest rate cut. Once rates are cut, more people have more money to invest and they're more optimistic about markets, so we can typically see stock markets rise within these interest rate cuts and low interest rate environments. Now that is a broad overview of interest rates and how they can affect markets. I don't want to sit here and bore you about interest rates all day. However, looking at this graph here as an example, we can see how rates at zero and how they affect markets. So we can see huge growth during this period when rates were pretty much at zero, which obviously if you're an investor and you would have invested within that environment, you would have made quite a lot of money, to be frank. Now interest rates could be seen as a tool to stimulate the markets, almost like a lever that the Fed will conduct. However, when we're seeing rates being forecasted to cut, this is going to show optimism within markets. Now during this year it could be a bit too early to tell, or we never know when the Fed are going to cut rates. However, if you are invested within the long term and your outlook is over a 5-10 year period, you shouldn't have anything really to worry about what the Fed and interest rates are doing day to day. So the main question really is why is the US stock market making all-time highs and interest rates at a high as well? Now, to answer this question, we need to boil everything back down and peel everything back to the beginning. Essentially, what is a stock market? A stock market is a place for buyers and it's a place for sellers to trade and exchange value. Okay, when you purchase into a stock market or you purchase an individual stock, you're just buying into that business. If that business revenues are increasing, debt is decreasing, and the business overall has a positive outlook for the future and future growth, then we're going to see markets of course rise, because at the end of the day, although interest rates can be manipulated, you're still purchasing into a business, and if that business is making revenues and is very profitable, you will see that value should be shown in the share price as well. That's exactly what we're experiencing now. If we were just going to have a look at Microsoft, which is currently one of the most valuable companies in the world, valued over $3 trillion US, right? We can clearly see that from the AI revolution and the tech being fortified within Microsoft and AI, that we're seeing optimism within this stock in particular. When I personally look at Microsoft, it hits all of my evaluation metrics as well as the fundamentals of the company. Revenues are growing, overall sales and the outlook is positive from last year, and it's kind of spilling over onto this year with their quarterly reports and earnings. As well as Microsoft fueling the S&P 500, there are 7 other stocks that are supplementing this growth as well massively. They're also known as the Magnificent 7. They're the 7 key stocks fueling the S&P 500 growth right now at the moment. Now, we've seen the huge demand in AI, and a catalyst for all of these stocks is these companies are now creating new products, offering new services and solutions to strengthen their own value proposition. This is why we're seeing so much more value being created within the share prices of these companies as they bring out new products and services across the board. Now, across the pond in the UK, it almost seems like the complete opposite is happening within the UK markets. The FTSE 100, it doesn't move much, and for context, Apple is quite literally worth more than the whole of the FTSE 100 index. Now, there's nothing really exciting going on in the UK compared to the US. We're not really seeing many new tech or innovation that's occurring within the UK. Hence why investors aren't really seeing much growth and they're not really being attracted to UK markets. Now, personally, I wouldn't really invest in UK stocks. I don't really see the value at the moment in the stock market in the UK. There's nothing much exciting going on. There's nothing new being built within these companies to strengthen them already. And it almost seems like a dead market in my opinion. Now, I think UK markets can have some really big and large optimism, but I only think that will happen when there's a catalyst coming towards the market, such as a new innovation within a specific company, if IPOs are going to start increasing again, as we haven't seen much this year. So it all depends on what value is going to be brought in to the UK or being created within the UK markets. Now, it will be interesting to see whether the US market can continue this growth throughout this year, whether the UK can start growing again. That'll be quite interesting to see as well. Now, if you do have any comments, leave them in the comment section below. I'd love to hear your thoughts, and be sure to like and subscribe as well.